On the weekly chart, we are looking for the main trend direction, and that would be short right now. You see lower lows, lower highs. The price is staying under the 36. Here it's breaking up, but then later on a new low, a new low, a new lower high. You have even a huge weekly 1, 2, 3 setup. The price moves back up. It's finding that area. You can even draw the line from up here. Then you have your 3 and more touches. Draw a zone like that. It looks a little bit like a buffer here. Then you can, it's easier for you to see how powerful that move is. You know, a bounce in this area followed by a red candle would mean that the price probably wants to move lower. Do we agree? I hope so. Then you just draw a line under our Heikin-Ashi candles and say, okay, if that breaks and the price moves lower under the 36, it will probably be a continuation of that short move. Yeah, we don't know that at this moment in time, but that's what the chart is telling us. The candles are red, direction of the trend short to the downside. Now we switch to our daily chart. Delete all the lines on the MT4. Draw them again. You know that you are looking for short setups in terms of swing trading. Then you draw your trend line like this. If you look a little bit back, you see all the tops here. You could connect them with a horizontal line like this. Here you have your touches. This trend line is breaking. The price is moving under the 36 and here under the 200 EMA. And what are we looking for now to be conservative on the daily chart? Yes, we look for red candles and trend line breaks. We know that we have resistance coming from the weekly chart. Now you look for a daily 1, 2, 3 setup. That means you need a lower point that breaks your trend line. You need a retracement back to your 36 EMA or 200, which is closer. In this case, both are okay. Then you need to see a break of this line and a candle that's closing under that line. In this case, let me make the chart a little bit bigger. You see you have a red candle here, but this red candle is opening here and it's closing higher. So would that qualify for a short? No, you want to see the price opening high and closing lower. And you have it, you don't have it here. You see even that one moves back up, but the next one is breaking the line, it's bouncing. You see the price not creating higher points, and then it's closing lower here under your 2 to 3 line, 0.1, 0.2, 0.3, the previous high over the trend line, the low under the trend line, and then the next high, which is lower than the previous high, 1, 2, 3, that is 0.2, 0.3. We call it the 2 to 3 line. The candle breaks that line, it's closing here lower, okay, and that would be your entry, the close of that candle on the daily chart. If you trade the daily chart, you put your stop over the highest point, a couple of pips over the highest point. In this case it's 20 or 30 pips. It's a daily chart. Okay, then you measure and say it's about 180, let's say 200 pips. Make sure that these 200 pips are not more than 2% of your whole account. Split the position into 3 parts. Go for your first target, which should be at least 1 to 1. So a stop of 200 pips means 200 pips target. Okay, so you take out your 200 somewhere here, if you enter there on the daily chart, and then 400 for your second lot, and you leave the third lot in for as long as possible. That means as long as the price stays under your resistance line and under the 36, you just need to take your stop from here and trail it over the 36 and your trend line. You see there, you didn't get any retracements back to the 36, no pullbacks yet. So for now you would have your trend line over the 36 somewhere here. You create a win-win situation because you made 200 and 400 pips, and now your stop would be like 200 pips in profit. So worst scenario, 200, 400, another 200 pips. Right now the last position is it would be in profit with over 600 pips. Okay, that's the way to do that on the daily chart. Now there's a second way, and that would be from the daily chart switch to your 4-hourly chart. There we go. And on the 4-hourly chart, again you draw your trend lines, and you will see that your trend line after the daily 1 to 3 would be somewhere here. Let me squeeze the chart a little bit. That is your daily trend line. Price is moving lower. You get your daily 1 to 3. Then what you do is you draw your line. You only have that as history. There you have your topping formations, all the touches. Don't use only the peaks. After your trend line you get a 1 to 3 setup with a retracement back to the 36. The price bounces on the 633 and the 36, which is great. It comes out of our ranging zone. A candle is closing lower. That would be an entry. If you miss out on the first setup, you can trade the second setup if the entry price on the second setup is close to the previous one and it's not like a couple of 100 pips lower. Okay, that's what we did here. First that entry and later on that one. Again, the same policy. Now you have a trend line, you put your stop over 0.3. Okay, every time you get a new low, a new lower low and lower high under the 36, you take your stop from over 0.3 and trail it all the time over the 36. Right now it is here with 400 pips in profit. Worst scenario, that was a stop of 80 pips. We took 80, 160, and the last lot is in profit with about 550 pips on the 4-hourly chart. Worst scenario, we get stopped out with 400 pips. That's a nice way to do it, right? That's all. That's how we do that, and that's basic stuff.